Hey folks, the signal noise, the week ending November 28. That should be, let me just fix that. Okay. Look, a bit of a quiet week this week. The Australian market bounced back from four down weeks, which is always pleasing. Maybe the start of the Santa rally. We'll have to wait and see on that one. The one thing that I've been tracking for a while is the issue about private credit. Private credit is essentially the new name for the old system, which used to be called shadow banking. Essentially, what happened was after the GFC, banks had a lot of new regulations put on them. So what they did was simply just went outside and created new companies and called them private credit to dodge the regulations. And so that's the reason why you're getting a lot of concern if you're following the business stuff. You're getting a rising concern among the regulators about what's going on in private credit. In the US, a lot of it is being thrashed around or thrown around all over the place. And that creates more risk. So that's something I'm going to investigate further and give you some more knowledge on that, so you can understand how to look at it. Because as I say in the top sentence there, when you've been through these cycles a fair bit, the problem is always money. It always comes back to finance and loose lending, lowering of lending standards. The Just to jump to the Oz economy, there's basically four property stories. Sorry about that, but that's what's going on in the economy. Inflation's rising; it's at about 3.8 or something. That's not that's a little bit unusual, but longer term, I think we need to get used to higher inflation. In the shorter term, though, what I'm talking about here is the property expectations for 26. You get this at the end of the year. What do you think will happen in stocks? What do you think will happen in property? Everybody starts making pronouncements. Um, Generally, the broad, my interpretation is that they came out this week with rules. APRA came out this one here with what I'm calling a yellow flag, which is in racing cars is a sort of a caution flag. Um, I don't know whether the rules will change lending that much, but I mainly because they don't apply to the non-bank institutions, which is growing considerably. Now that again gets back to a little bit sort of to private credit. Again, what's happening is you go to a bank, Westpac, Commonwealth, whatever, and say, I'd like a home loan, and they go, no, sorry, you can't qualify because you've got this. If interest rates rise 3%, you won't be able to afford it, so therefore we can't give you the loan. So what they do is they go to a broker, and the broker finds a non-bank financial institution to lend you the money. Now, the reason why is because they go, yeah, don't worry about the buffer. Here's the loan. And then they sell the loan on to investors. Anyway, Boys and I will talk more about that in the podcast, but it's a really interesting setup. The reason why is because this is what contributed to the problem in the United States before the GFC. And so Australia's market's starting to look very, very similar. Um, but I won't go through all of it here. Okay, short stories. Immigration, I think, is an issue that's going to pop up more and more. I'm seeing more and more of it in the United States and the UK. We already know that a lot of countries are getting a bit sick of tourists, i.e., foreigners. So that's going to continue to play out, and I think that's going to be a big issue for the next decade. There was a proposal put by America to resolve Russia-Ukraine war, which really turns out it was written by the Russians. So I don't think anything's going to happen there. We're just going to have more fighting and more arguing, and it'll go on for a while yet. Probably until Europe decides what the hell its position is. Nobody in Europe knows either. Okay, so yes, Oz, the land of milk and honey. Just a personal anecdote. Look, I don't take it with a grain of salt. I went to a big shopping centre on last Sunday to buy something. Chermside Shopping Centre, which is the biggest, I think, in Australia. Um, Anyway, point being, I drove in and it took me 20 minutes. I still couldn't get a car park, so I just drove in and then spent 20 minutes driving around and then drove out and came home. Point being, I don't know whether it's Christmas, but there's a lot of people out there spending some money, doing their Christmas shopping, or they're there because the air conditioning is free. And it might be a bit of all of the above. Lesson of the week, just talking about rebalancing. And again, reiterating our point about timing the market. Talk more about it on the podcast. Okay, so thanks, folks.